That's right, stock traders are crazy. And if you understand how they're crazy and why they're crazy, you can actually make a lot of money from it. So that'll be the topic in this week's Stockscores Market Minutes. Of course, I'll do my normal market analysis. We've had some turmoil in the stock market lately, and I'll tell you what to watch for in terms of further weakness or perhaps a rebound in the markets. And then at the end of the video, I'll do the trade of the week on MLGO. All right, so let's get into this discussion of why traders are crazy. In theory, financial theory argues that investors are rational, that we make buy and sell decisions based on a rational assessment of fundamental value. Now, in the short term, I'm going to tell you that nothing could be further from the truth. The reality is, stock traders make decisions fueled by their emotion. It's the fear of missing out, the fear of losing. The emotional attachment to money is what drives many short-term trading decisions. If you want to understand the market, you need to understand people's attachment to money. It's very important to never believe in the story, but instead do what the market tells you to do. Now let's look at a couple charts here just to show the craziness of the market. So this is a stock that's been fairly active and quite a good trader the last week or so. And what I want you to notice is just the swings in volatility and price. So back here, the stock was at 30 cents. That was on March 6th. It went all the way up to $2.30, and then it went all the way down to 40 cents, and then it went all the way back up to $2 and all over the place. You can't say that that kind of volatility is driven by fundamentals. I mean, the company's business didn't change that much over the course of a week that you could justify 700% gains and then losses and then gains in the same period. So there must be something else at work in the market, and it is, and that is human emotion. It's the fear and greed that drives the market in these short-term swings. Now, is that a bad thing? No, you can make money from it, but you can't believe in the story. You shouldn't be reading the news releases and thinking, oh, this company has a new cure for some terrible disease and that's why the stock is going up. It's supply and demand. If there is something that drives investor optimism and there's not many shares available to buy and you have millions of shares of buying coming in, that's how you get these big price swings. But eventually the market realizes that whatever drove the stock from 40 cents to $4 doesn't really make sense, and then the stock falls right back down again. Remember, these stocks are promoted to move the stock up, and some people call that pump and dump. You can call it whatever you want. I call it a gold mine. As long as you are willing to not believe in the story and simply trade the market action. Let me show you another one here. This is another stock and just more of a daily chart. But back in January, this stock was at $2. And then in the course of 1 week, or actually 1 day, it went from $2 up to $9. And then it fell all the way back down to $2 again. And then this past week, it jumped again, went all the way up to $6 and finished the week at $3.50. Now again, this isn't fundamentals that are driving this market action. It's strong demand for the stock, driven by typically some news or some promotion that happens in social media, that sort of thing. These promoters bring in millions of shares of buying. A stock that doesn't have very many shares available to buy, we call that a low float stock, can then see its shares triple, quadruple in price in just a day, sometimes in the matter of a few hours. And if you're a savvy trader, you can take advantage of that. And a big part of what I do is I look for the abnormal activity early in the move. I jump on, and then I look to sell it as soon as the party is over. And I'll tell you, almost always on these stocks, the party does end. All right, let's get into this week's market analysis, and we'll jump into the Stockscores website. And just a reminder that I have a free weekly newsletter, and I encourage you to register for that. Just click on the register button. I'm already signed up here, but if you want my weekly commentary, some stock picks, that's all free, and you can get that at stockscores.com. Let's begin with my analysis of the S&P 500. And you can see that we had this upward trend broken there. That's when we first started to be a little worried about the market. We had a little bounce back, build of a falling top, and now breaking down from a falling top. So that's fairly negative. If the market moves down through this floor, then I think you need to be even more defensive. We still have that short-term support. Let's see how the market behaves on Monday. But that trend is not looking great. You can see there it's fairly bearish. Why do we say bearish? Because the tops are falling from left to right. So the sellers are in control. This is that line of support on the S&P, and if it moves down through that, I think we're going to see more weakness. Now looking at the 3-year weekly chart, we have not broken down from a falling top yet. We've broken down from a double top, which is not great. But if we make this falling top and then go through this floor, we'll have broken down from a falling top, and I think we could see more weakness. So I want you to be fairly defensive next week. Let's take a look at the QQQ, and very similar. You see this breakdown from a falling top. And by the way, this is not a bad thing. When markets sell off, they create opportunity. If we go back and look at the 5-year chart of the Nasdaq, what I want you to notice is that out of weakness, here's the COVID crash, we had tremendous strength after that. Here's rising interest rates in 2022, and we had tremendous strength. Here was a little pullback late in 2023, and then tremendous strength. So weakness brings strength, and it recharges buyer interest. So as much as it's kind of lousy to go through it, just remember the stock market takes the stairs up and the elevator down. So you get quick pullbacks, they don't last all that long, and then you go back into that steady climb. It's the quick pullbacks that create opportunity. So if you're scared of the market right now, just be ready, because it will turn, and it always does. Just wait for the turning point. And I'll keep you updated here, of course. You just have to make sure you're subscribed to the channel, because I am doing these videos every week, and I'll let you know. All right, here is IWM, small cap market, underperforming the broader market, and it too is building falling tops. Has some support here if we start to move down through that floor. Probably more weakness coming. If we look at the 1-month chart, you see the trend is down, and the 3-year chart, we have also broken the upward trend line. We are coming into pretty strong support though. This area right here is a strong floor. We've seen the market bounce off of it a number of times. So I think we're getting to the point where we should see a reversal, and perhaps that'll be next week. We'll watch, and I'll update you next week. All right, let's take a look at the Canadian market, which has held up better. And one of the reasons it's held up better is something I'll show you in just a moment. But here you have a head and shoulders top, and if we break down through this floor, that would be negative. However, at this point, it's just a sideways trending market, unlike the US markets where we've seen that fairly strong downward pressure. The Canadian market's more of a sideways trending market, so it doesn't look as bad. And there you see the short-term chart. Yeah, we had a little weakness this week on trade war talk, but hopefully that gets resolved. Let's take a look at gold, which is one of the reasons the Canadian market has held up so nicely. And we always like to buy stocks that either break from low volatility or break pullback. So here was a pullback and there was a break. That was a good opportunity. Here was a pullback. That was a break. That was a good opportunity. You don't want to be a buyer when you run away from the trend line. So if you have a trend line and you're far above it, don't be a buyer. If we look at the 3-year chart of the weekly, 3-year weekly chart, this is the other opportunity to buy, and that is when you break through resistance from optimism, from low volatility. Of course, I did a lesson on that on Tuesday last week, and that video is on the Stockscores YouTube channel. This breakout right here motivated this upward move in the market, and I'm not comfortable buying up here unless you're a very short-term trader, day trader. Maybe there's opportunity, but the longer-term picture is one where you're just pretty overbought. You see how far we are above that trend line, and so that really ultimately shapes up for a pullback. So no sign of it yet, but you want to watch out for that. All right, let's switch over to the oil market now, and it's suffered for most of this year, a little bit of a rally this week. I would say it's a stable market as much as we've had that sell-off to start 2025. The big picture here, the 3-year chart, shows you that we've just been stuck in this sideways range for almost 2 years. And we should move up towards the highs here. And then when we get there, we'll get stuck and probably head lower again. So I don't really like the energy market for individual stocks, but it doesn't look bad, just doesn't look very good either. All right, let's move along to currencies. We'll start with the US dollar, which has suffered as Trump has had his tariffs and trade talk. It has hurt the US dollar. You can see the pullback. We're coming into a floor here where it should bounce off of that. If we look at the 3-year weekly, we see that it too, much like oil, is really just stuck in this long-term sideways range. It was performing very well here, and now it's giving back some of that. Doesn't look particularly good, doesn't look bad. One chart that many people have an interest in is Bitcoin. Here's the Bitcoin chart, and you can see for the last 2 months it's been trending lower. So the short-term picture, not that great. Here's the 1 month chart, and you can see the downward trend there. But on the 3-year chart, the longer term picture is still decent. Here's your long-term upward trend line. You ran away, overbought, pulled back to the trend line. Ran away, overbought, and now pulling back to the trend line. So the long-term picture is okay. The short-term picture, we're just going through some profit taking. The last chart I want to look at today is TLT, which is our bond market chart. Very important for particularly the small cap stocks because they are very interest rate sensitive. And you can see that the bond market has stopped going down and it's starting to build optimism. It needs to start to get through some of these resistance levels. We're seeing the market start to think about maybe rate cuts from the US Federal Reserve. It's, I would say, somewhat of a neutral chart right now. It stopped going down, which is good, but we need that word from the Fed that they are going to actually do some interest rate cuts to get the bond market moving up, which means interest rates moving down. All right, so let's take a look then at my ratings. US large cap, bearish in the short term, neutral in the long term. Same for the Nasdaq. Small caps, a little uglier. We'll call that bearish on both time frames, but the Canadian market a little better, neutral on both time frames. Gold remains bullish on both time frames, but I would exercise a little caution there because I do think it's getting a bit overextended to the upside and maybe ripe for a pullback. Oil stuck in a sideways range, we'll call that neutral. US dollar short-term bearish, long-term neutral. Bitcoin short-term bearish, long-term bullish. And then bonds neutral on both time frames. All right, now let's take a look at the trade of the week. This is an example of one of those crazy stocks where people chase it higher and really push it to irrational levels. And while it may seem like an odd thing to want to buy a stock like that, as a day trader, you can make lots from it. So this is MLGO, stock that had a number of trading opportunities through last week. This was from Thursday, I believe, the 27th, Thursday. And so we had this nice move up, a pullback, and you'll notice there's a little pink and yellow dot there. That's my action candle indicator. And when the action candle breaks a pullback like that, it's a pretty good setup. So you have your entry point here, stop loss there. That's your risk. And then any multiple of that is what we call our reward. And so we can see that this went up 2, 3, 4, 5 times risk. So a 5 times risk reward ratio. And an exit would be somewhere in there for about a 4 times risk reward ratio. That means if you have $1,000 of risk, this trade makes $4,000. If you have $100 of risk, this trade makes $400. If you want to learn more about how to execute my strategies, you can go to the Stockscores.com website. Go to the trader training area. We do have a special discount this week, and if you look through some of the videos that I've put on YouTube, you can find those discount codes for some of my courses. Hope you've enjoyed this week's Stockscores Market Minutes. If so, click the like button, make sure you're subscribed to the channel, and as always, trade well.